y'all. Welcome to another episode of Mortgage DNA. Dwayne Stein and Andrew Makovit. We're here today to talk to you really about just our weekly update on what's going on. And our topic today on Mortgage DNA, some new numbers came out, Andrew, and I want to
Yeah.
address this with you, is the new numbers that came out with the household debt reached 17.5 trillion. And Andrew, look, there's good debt. Owning a home is good debt,
Right.
being a homeowner. But Andrew, 1.13 trillion credit cards.
Credit
brother.
cards.
Credit cards, man. Are you in that number, dude? Or are you just savvy? Where are you at with that?
Listen, I'm thankful that the credit card companies lose money on me, right? I'm not paying them interest, but I'm getting my points.
Yeah, you're getting your
Yeah.
points. But
Yeah.
you also, look, we deal with this on a daily basis, so we know what it looks like when people are maybe living a little bit outside their means.
Right.
And Andrew, that's what's happening, man.
That's what's happening.
And
Right.
I think personally, there is not a debt crisis brewing. And this is what me and you will talk about, but the headlines will never say this because it's a political year. And there is not a debt crisis brewing. The debt crisis is here, bro.
Yeah.
I mean, more cars than ever are being repossessed, right? Used car lots a year and a half ago, there was no lots.
It was a ghost town. Right. There was
no
more
cars,
uncut grass than there was slots of cars.
right? Now you drive by, dude, they're everywhere.
Yeah.
Right? Used cars especially. So you start looking into this and it's like, man, what is going on? Another concern that I'm starting to see that really scares the bejesus out of me is mortgage delinquencies creeping up, bro. And the headline's going to say, it's still lower than where it's been over the last 30, 40 years.
That 30, 40 years thing is always, it always makes things look a lot better than what it really is, right?
But let's slice through it. You know why it's lower? Because what's starting to show up now is people didn't have to make a payment for over 2 years.
Didn't have to, right?
So that nice moratorium that got put into place that people didn't have to make any payments, Andrew, now they're having to start making payments, and lo and behold, they can't.
And not only that, but also the student loan debt that they didn't have to pay, right? So putting those, which arguably your student loan debt and your mortgage, probably the two biggest, loans that you're going to be carrying throughout your life. Yeah, and those two are coming back into play in addition to this.
And nobody was budgeting for that, Andrew.
Nobody
was going, hey, I'm going to keep this money on the side so that way when they start telling me I got to pay it again. No, you know what everybody's doing with student loan debt? Their fingers are crossed. They're hoping that they get that they're in that number of whatever they're going to do is relieve some folks,
That's kind of went to the wayside, didn't it? There was a lot of talk.
But we had a client that sent me over a letter that they got 100-something thousand waived, that they timed it out. First one I'd ever seen, man.
Yeah.
First one I'd ever seen. And they wasn't like some, I'm not going to get into what they do. I'm not going to bash a profession, but put it to you this way. They wasn't some
brain surgeons.
Surgeons. They were not police or teachers even. Nothing like that. So it's kind of crazy. And so
let's get back to the
and I've been talking about this on Mortgage Gumbo. This is not going to be the year of the giveaway like everybody thought when we turned the calendar. Oh, it's an election year. The giveaways, all this. It's not going to happen. It's not. And our rate's going to go down. Yeah. But if you go back and people listen to my show and listen to me and you talking, we said you wasn't getting a rate cut in January.
No.
We said we didn't see it happening last week or the week before in March. Now that's been discussed. Now they're saying it's a 70% chance now in May, which is probably about right.
We've always talked about Q3 though, right? We've held our hand on that.
I mean, so
if that's the case, there's not going to, if there is, there's not a lot of rate hikes or cuts that are going to happen. If they start in May, June,
right.
They're not going to just go crazy.
So my question is, and I'm starting to see refinances pick up, and not on the rate term, which means,
Right.
hey, I want to lower my rate or do a streamline. But Andrew, like we're talking about, this debt is huge. And
It is.
what I tell clients, hey, cool, you got that 3% rate. But are you wearing that like a badge of honor and hemorrhaging with all these credit card debt that's adding up?
1.3 trillion. Tell me, yeah.
Are you
Yeah.
one of the 1 out of 4 people to 25% of people who have a car note over $1,000 that is just added up and it's snuck up on you, and here you are? Right? So those are the things there. Now, the good news is for people, if you have to consider refinance, you've got more equity than you've ever had.
Ever.
And which means you could pay off more debt. And I'm saving people 5, 6. I've got another person, I'm doing $2,200 a month. So at the end of the day, that 2.5 or that 3 or that 4%, go try to buy bread and milk with that. See how that works out for you, right? Flash that to the cashier and go, hey, check this out, what I got. Am I good to go?
Yeah.
No, it's the money in your pocket, right?
Sure.
Are you seeing any pickup on the refi?
I'm starting to get interest. Yeah, there are people that are. I don't think the pain is there yet. It's starting to come though, right?
Well,
the
Christmas,
Santa Claus money.
Santa Claus
is going to have to start
stuff.
getting paid.
And it's normally March and April when you really start to see it pick up, right? And so I think the debt, what I would caution anybody watching is, you got to try to figure out how to get a hold of it. I mean, look, whether you go online, you got to start creating a budget. You got to start figuring out. I mean, now when they're running commercials about budgets and how to do budgets and, on national commercials and all that, it's a big deal, right?
Yeah.
So, find out. Go get a budget. Get yourself in place. Are you paying for things that, you don't need to be, right? And all that kind of stuff, So, because you can't tell me things are tight if, you still got Saint season tickets, you're getting a newspaper delivered, so to speak, right? And all that kind of stuff.
I think that people are creatures of habits, and COVID, stay at home, shelter like that. I want it now. We need to get away from that a little bit, or a lot, actually, not a little. It needs to happen where people need to go back to, hey, if I don't have it, I don't need it, right? If I want something, I better have some disposable income. It's just credit card. 1.3 trillion is telling me that that's a serious problem.
Bro, that's a huge, that's concerning, man.
It is.
Because, what's the first thing people are going to do? I'm going to pay my house and my car before I pay my credit card,
sure.
Right? However, and you and I know this, you start going delinquent on credit cards, guess what? Credit scores plummet.
It takes one missed payment, right?
And your credit score plummets.
Yeah.
So then when you're calling us to do that refinance later,
it's
now
too
you're
late.
Not getting, the best option. Maybe you can't.
Or not. Or maybe you're not getting anything.
Or anything.
Yeah.
Or anything. And that's the thing that I think what I'm seeing and the feedback I get. I talked to a group yesterday and, one of the things, and it's insurance, and in South Louisiana, we're dealing with that. And I know insurance across the country is going up, but it's affordability issue.
Yeah.
And, they're talking about how they're having people right now just saying, you know what, I just won't have insurance. And, as someone with a mortgage,
can't do that,
folks. No. So you're going to get a forced place insurance policy, which is going to be much worse than anything else you got. So there's a lot out there with that. Let's sort of, I want to get your opinion. I want to shift here, right?
Okay.
Credit, it's something, and people have just got to come to grips with it. It's that reality. Do I want to hang on to my 3% rate and have all this, or do I want to get with Dwayne and Andrew or my lender and find out, really when we look at this, what am I really paying?
I think it comes down to that no matter what the mortgage rate will be, it's still the cheapest money that you ever can get lent to you, regardless of what it's at.
Yeah.
If it's at 8 or 7 or 10, It's still cheaper than a personal loan. It's still cheaper than the credit card.
And to get into taxes, right? Hey, you could write
Yeah.
off your interest on your
Right.
house, not on the credit card.
Sure.
All that kind of stuff.
Right.
Let's pivot to Jerome Powell, the Fed chair. What is your thoughts on all of these folks? Number one, they contradict themselves. But now we've got a Fed chair who's doing 60 minutes.
60 minutes.
What is your thoughts on that, Andrew? What do you see? How can that be good for the economy?
You know, words are more important than actions, right? And the speak that he gave, more so in 60 minutes, I think it calmed things down, right? In my opinion.
Yeah.
And I thought that was good to see like a human element to the Fed, which, you know, mostly it's robotic. I mean, I listened to the guy speak, and I don't know about you, but a lot of the stuff, it was over my head. I was like, what the hell's going on? But he seemed more human in that light, right? On 60 minutes. And I know the market kind of got killed a little bit on Monday and Tuesday, but I still think it reassured us for long term that, hey, we can't have that soft landing, which I don't think we ever have seen a soft landing before, but we might be engineering one now.
Yeah.
So to me, it was positive. I thought it was a good light. He was cast in a good light. What he said was smart. I think they did a great job with him.
My thing is this, and I agree with you 100%. He humanized it. What I don't understand is he'll speak, right? He's the boss, right?
Yeah.
We know who our boss is, right? He's the man.
Right.
What he says, that's gospel. But imagine if he came and told us, here's what we're doing, and then me and you came on here afterwards and said, he don't know what he's talking about. And that's what these other governors, these voters, they've got to go get their 15 minutes of fame. So that's what's amazing to me is he'll say something and he carries a lot of clout. Yeah. But you've got these 12 other folks who vote and they go, well, wait, I need my 10 minutes of fame. I can't get on 60 Minutes, but maybe I could get on something local or get a quote into the Wall Street Journal by saying, not so sure. You had one person go, well, we're still considering, Jerome won't say this, but we're still considering we may have to increase rates if jobs done, keep going where we're at. Like, and that's when you saw Monday, everything pooped the bed.
Kind of hit the fan, right?
Pooped the bed, right?
Yeah.
When all he's saying is, and he's got to back up, he kind of put his foot in his mouth back in December. So, but I'm okay with that. But my big thing is,
look, only three things there's only three things that can happen. It's either going to go in one direction or the other or stagnant, right? And so of course he has to, keep the door open for all three. What he doesn't want is stagflation like in the 70s, obviously. Yeah. So I don't think we're, going in that direction, but overall we'll see. I think he's given himself a lot of room to wiggle room to work with on this. I think that we're going to start seeing the market come down a little bit. And I guess we're going to have to tune in the next couple of weeks for us to talk about that topic again.
You just tune in every week and listen up because, we sit through Powell's speeches and sit there and scratch our head and take notes and go, so you don't have to. Believe me, you don't want to have to listen to his speeches and his correspondence. But at the end of the day, let's circle back around here. At the end of the day, right now, today, every home buyer out there, based on what happened from December and now where we are over the last 8 weeks, has $25,000 to $30,000 more in buying power than what you had at the end of November. Yeah. And we saw all the 2023 data starting to come in now because we've got a whole year. And guess what? Now, your market's different than my market, but as a whole, as a country, we're going to see between 6 and 7% home appreciation. So at the end of the day, Andrew, buying a home, it hits it out the park again, it's right?
Always the best investment, right?
The park again,
right?
And
right, you got to get it before take advantage of it. It's it's like, hey guys, this is Tesla, this is Apple. and the early Google
Yes.
and the early stages, you're guaranteed going to make
Yes,
money.
you are. And
Yeah.
to have decade high rates in 2023 and still have 6-7% appreciation, I would sign up for that if my financial advisor said, hey, I'm going to guarantee this or as close to this over the next couple years. You're in. Another stat I heard this week, and you may have heard it because I know we follow a lot of the same people. Barry Habib mentioned and showed a stat that was staggering. Since 1942, there's been 1 year, and that's 2006, that homes have not appreciated. And in that year, it only lost 3%. So that is amazing when you think about
It
that.
is.
So that's as much of a guarantee as you can get. And I think
Yeah.
that for folks that are watching this and understanding, should I get into the game, find out what your buying power is and see if you want to buy. And I think for homeowners, look yourself in the mirror, have that tough conversation with your significant other, lay everything out and go, hey, did we kind of get snuck up on here? And all of a sudden, these bills, that minimum payment on that credit card has doubled, tripled. And then you magnify that times 3 or 4 of those, right? Things have gotten a little tough, not to mention milk, bread, everything else is more expensive.
So I guess what you're saying is it's better to have a higher interest rate, more money in your pocket, than have the lowest interest rate and be asking somebody for a lunch.
Cash is king. And
right.
And listen, these credit cards, they know what's up, and people think, oh, I just won't pay it. I've seen clients where you cannot get away with the old, oh, I'll show them, I won't pay them. Now you've got a house that's got liens, right? We just had a customer buy, Andrew. These people had over $60,000 in liens on credit cards and defaults on autos that got put on their house. So they thought they were selling a house and making $100,000. They walked away with 30 because they had to get all those liens paid off.
They were lucky to walk away
lucky that,
with something,
and they
right?
settled a lot of that. So they were lucky because that stuff added up there. So what else you got the rest of the week, man? What's going on up in the big OHIO, bro?
Man, so we got a party here today at corporate. It's for the Super Bowl.
Nice.
Just in general, anybody can wear whatever they want. That's
Who
pretty
you
cool.
picking, man? I'm putting you on the spot. Who you going with?
I'll go with the Chiefs.
Dude, you have to.
Yeah.
I don't want to hear about Taylor Swift, but you know what? If the Saints aren't in it, I used to say I want Tom Brady to win it every year. Now Mahomes is that dude. If the Saints aren't in it, I want Patrick Mahomes to win every year, so I can, when I'm up in the sky or wherever I'm at when I pass, and
you say you saw him.
I'm like,
you watched greatness play.
That dude.
Yeah.
You can't bet
I like it more so that I think the Niners have a better offensive team. Yeah. Like they got way more weapons. Mahomes is doing it like Brady did with a great defense and
he just won't.
I mean, obviously you got Kelsey, but that's it.
At the end of the day, Mahomes isn't going to make a mistake. He's that pesky team you play, right? When we were growing up, you're better than them, but they're fundamentally sound, and they don't make a mistake.
And they're waiting. They're just waiting on you
before they hold, right? Those type of things.
Yeah.
And I think that's what you get with those guys. And so I'm all over the Chiefs as well. And we'll see. Don't open.
Yeah, so I got that. How about you? I know you.
Man, look,
the Mardi Gras
parade this past week was awesome. We had to change the date up on road on Sunday. It was like Mardi Gras people, man. It was 10 deep. It was packed. Mad Hatters. It was amazing. So had a great time there. And a little bit of depression going on. My son Gavin's senior year is officially here now, and so we've started playing ball. A couple games in, so. Nice. Here we go, man. So, I know your boy's a little younger, but you're in the midst of all his sports. Embrace it, dude. It comes quick, and then here you are, man. So about to be a empty nester, bro. So
I'm sure you're gonna find things to do.
I'll figure it out. So, but social media, hey, we're easy to find. Look us up, follow us. If you're finding us here, you're chatting with us. Check us out. Give us a like, and as always, hey, if there's something you want us to talk about, shoot us an email, put a comment, let us know what you may be interested in finding out about. And then, selfishly, use a quick plug, Mortgage Gumbo. For me, Andrew, I take every February and make it Credit Awareness Month. So we could get those people ready to go for the spring buying season. This week we're talking about tips and tricks, man, on how to get that credit. Me and you, not only do we have the great looks, but we have some great skills on how to teach people and fix credit up, right? There's some things we could do to
Right.
move up people's credit immediately. And so we'll be going over that this weekend, man.
That's awesome. That's a great tool. I do that a lot for
Yep.
free, explaining to people. And really quick on that subject, why don't you think people or other lenders actually offer that help? I mean, I give you my take on it, but
I just don't think you have folks who they're not in it for the long haul. You have
right.
lots of people now that are left in our industry, and it's too many of them who got in thinking this is a get-rich-quick scheme, and they're in it for them. They're not in it for that client. They're supposed to be servicing. You and I have the same philosophy. When somebody chooses to use us, they hired us. We work
Yeah.
for them. And so our job is to look at and see. And, so many times I'll have a realtor call me after or a client go, well, thanks. Yeah, you qualify at the 617 where the other lender turned you down. But look, if you go do this one action, now we get you to 640. Now it's a different program. Or even better,
Yeah.
it's less money. It's a cheaper payment. It's a
Yeah,
better
cheaper
rate.
payment.
So it's not about, I think the difference with you and I is credit doesn't intimidate us where it does everyone else.
I do think that's true. But the other thing I was looking at, and I wanted to make the point is, so when we do these what if scenarios with people, we actually can manipulate the credit and see like what the reporting of the bureaus will do by that. But once that's done and we do these things called rescore, guys, it costs us money. It's actually like $37 or $38 per line per credit bureau, right? So like if that's like one account and that's, for credit for TransUnion, Experian, and Equifax, that's almost $100, right? And we're willing to do that per line.
Doing business. We'll do it because
it's cost of doing business. A lot of people poo-poo that they won't do it. So I think that's something that we're willing to do. And guys, that comes out of our P&L. But in the end, I do feel like that ripple of kindness will eventually come back to you if you do the right thing.
It's the cost of doing business. And Andrew, I'm even seeing now locally, I'm seeing where lenders are charging up front for a credit bureau fee. But that's the signs, and that's where it's at. We offer a free soft pull, folks. Free. So there's no cost, no obligation, just answers. So
and not a lot of phone calls either.
We remove that obstacle.
Yeah,
we remove it. It's gone.
But the soft credit, meaning you're not going to get 20 lenders calling you, right? Which is important as well. Not a hard inquiry. Right. And that costs us more money too, guys. When we're doing a soft credit pull, it still costs us money, and we're going to have to do a hard along the way. But we're willing to do that to make it a better experience. I think just for the lack of the phone calls that you're going to be bombarded with is key, and it's a soft inquiry. So I think it takes the fears away. But with that being said, we're not going to charge for a credit pull. We're not going to charge an application fee. It's completely free, and geez, we have, 40 plus years of experience between us.
Yeah.
So that says a lot. So
absolutely.
Don't forget our, turn times are quick. Our experience is there.
Yeah.
And you know what the hell's going on along the way, which I can't tell you.
We're going to walk you through. We're not going to push you in front. We're going to guide you, right? We're going to guide you and tell you why we're doing what we're doing and make it be, we know buying a home or refinancing, it's nerve-wracking, but the process doesn't have to be. And that's what we want to make sure that we're guiding you with, no doubt.
There you go.
All right, folks.
Couldn't have said it any better.
Check it out. Check us out next week. We'll be back next Wednesday for the Hump Day Holla, brought to you by Mortgage DNA.